Welcome. In this video, will the XCN coin price rise continue? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When the price chart is carefully analyzed, it becomes evident that a specific resistance level, which had previously been tested multiple times without being broken, has finally been surpassed with a strong move. Such critical resistance zones are highly important in technical analysis because they represent areas where price has repeatedly stalled in the past, where selling pressure intensifies, and where a strong psychological barrier is typically formed. However, this time, due to a positive shift in market dynamics, the courage of buyers, and an increase in trading volume, the price has managed to break above this significant resistance. This breakout can be seen as an encouraging signal, not only for short-term, but also for medium and long-term investors. These types of resistance breakouts often indicate the beginning of a new uptrend in the market. Especially if the level had been tested numerous times in the past but never broken, the fact that it is now breached demonstrates significant technical strength. This suggests that sellers are weakening and buyers are taking control. From this point forward, the price's movements become particularly critical. Typically, after such a breakout, the price tends to consolidate above the broken resistance level. This means the former resistance now turns into a new support level. In technical analysis, this is known as a resistance-turned-support scenario and is considered a highly reliable structure. At this stage, what investors pay the most attention to is how the price retests the level it has just broken. If the price pulls back toward this level and then reacts strongly to the upside, it is considered a healthy retest. Such a retest boosts investor confidence and creates a solid foundation for the price to continue moving higher. Strong reactions following a retest are often seen as the beginning of new highs. It also reflects the strength and determination of the trend. In strong trends, broken resistances rarely get breached again. Instead, the price tends to take support from these levels and aim higher. A resistance breakout that is supported by trading volume indicates that the breakout is genuine and that market participants have successfully overcome that level. Volume plays a crucial role in technical analysis. If a price breaks a level with low volume, the sustainability of that breakout may be questionable. However, a breakout accompanied by high volume clearly confirms that the level has been passed. A pullback to this region afterward is entirely healthy from a technical standpoint. Price movements are never in a straight line. They always follow a wave-like structure with ups and downs. These fluctuations create great opportunities in technical analysis. At present, the price may be in an attempt to hold above this important level that it has just broken. If a pullback occurs to this level and strong buying signals appear from that point, it presents a very positive outlook for both short and medium-term investors. Because this level, which has now assumed the role of support, begins to act as a safe haven for investors. As a result, investors who had been watching this level may find an opportunity during the pullback to enter the market, having missed the initial breakout. This, in turn, brings more buyers back into the market and helps sustain the upward movement in price. This type of structure can also be supported by chart patterns. For example, the broken resistance level may correspond to the handle area of a cup and handle formation, or on a broader scale, it could represent the neckline of an inverse head and shoulders pattern. These types of formations are considered reliable in technical analysis and become even more meaningful when combined with a resistance breakout. Moreover, the retest move that follows the breakout serves as a confirmation of the pattern, which further strengthens the trend. But we can't make decisions based on support alone. Let's also take a look at other metrics. Stay tuned. When the chart is carefully analyzed, the presence of a clearly defined and strong upward trend becomes evident. This uptrend indicates that buyers are dominant in the market and that the price is progressing within a bullish structure. Such upward trends typically instill great confidence in investors, as periods where price movements steadily rise are associated with increased investor willingness, heightened positive expectations, and an overall optimistic market sentiment. Currently, the price appears to be positioned very close to this uptrend line. This is a highly significant development from a technical analysis perspective. Touches on a trend line are often interpreted as the beginning of a new upward move. A price reaction from this point suggests that investors are adopting this level as a support zone and that buying activity is intensifying. In such a scenario, it is expected that the price will regain upward momentum. Therefore, the current technical structure could be signaling a positive scenario. Rising trend lines also serve as a guide for investors. As price movements continue to follow this line, it indicates that the trend is healthy and that upward momentum remains intact. If the price continues to respect this trend line, strong signals are received suggesting the continuation of bullish movement. This boosts investor appetite and reinforces confidence in the market. The current price behavior seems to be following this direction. This type of setup also creates an environment suitable for the buy the dip along the trend strategy in technical analysis. Investors may see pullbacks within the uptrend as opportunities. Each touch of the trend line is considered a new buying opportunity. Therefore, the fact that the price is now this close to the trend line is a particularly interesting development for attentive investors. A potential upward move following this touch could present a profitable scenario for both short-term traders and medium to long-term investors. Moreover, the fact that the price is reacting to this trend line with strength and volume rather than weakness is a positive sign. Volume-backed upward moves indicate that the price is progressing on a solid technical and psychological foundation. These volume-supported reactions often precede strong rallies. So, if the price gains momentum from this point, it could open the door to a much larger rally. Additionally, reactions following contact with the trend line often indicate a shift in investor psychology. Even previously, hesitant investors may choose to enter the market after such a point. The price's adherence to the trend signals that the market remains bullish and maintains a stable structure. This is a critical factor in evaluating the strength and continuation potential of a trend in technical analysis. The price continuing along this rising trend line suggests that the market is experiencing stable growth. Especially when these touches occur at regular intervals, it proves that the market structure is functioning in a technically sound manner. This scenario is considered a reliable one in chart reading. Trend lines set the rhythm of price movements, and as long as the price respects this rhythm, it is believed that the uptrend will continue. From a technical standpoint, these types of rising trend structures also form the building blocks of major chart patterns. For example, over longer time frames, price movement along this trend can form a cup pattern or an inverse head and shoulders pattern. The completion of such patterns offers investors significantly larger price targets. The MACD indicator is one of the most widely used and reliable signal tools in technical analysis. In particular, it is known as one of the earliest indicators to signal important structural movements in the markets, such as changes in direction, momentum shifts, and trend reversals. At the moment, the MACD is pointing to a turning point that needs to be carefully monitored. When analyzed on the chart, it is seen that the MACD lines made a downward intersection some time ago, and there was some pullback in prices after this intersection. However, the possibility that this movement is a temporary correction in nature and that a new direction is being prepared is quite strong. Bearish moves following downside crossovers usually indicate that the market is tired in the short term and is resting. But the important thing is whether this bearish process will be permanent or temporary. In the current outlook, MACD lines seem to be preparing for a rebound. In particular, the upward acceleration of the histogram from the lows may indicate that momentum is slowly turning positive. If this pattern continues and the MACD lines make an upward crossover in the coming days, this could be a harbinger of a new bullish move. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.